Welcome back, everyone. This is Thomas Triple T Ty with another new bullish crypto analysis. Before we dig in and take a look at the news, that macro news that may impact the markets, remember this is for edutainment only and not to be considered as financial advice. Additionally, I would appreciate it if you could help spread my analysis to help, especially newbies, so they can stay informed and make better decisions. So with that, feel free to smash the like, ring my bell, hit subscribe, or leave comments at any time during the video. So let's dive into the news. According to CNBC, TikTok looms large in tech earning reports as digital ad giants struggle to keep up. What they're talking about here is companies like Facebook, Google, Amazon. They're struggling with ad revenue because platforms like TikTok, and they are eating their lunch. TikTok is getting a lot of the shares in ad revenue, while the other ones are struggling. And analysts don't seem to think that it's going to go away anytime soon. So, and companies like Facebook have adopted a lot of TikTok-like features, but it hasn't been translating well into ad revenues. Also on CNBC, Apple shares dip after company warns of possible 8 million hit from supply constraints. As you probably have heard time and time again, we are facing supply chain issues with a lot of it coming from China with the zero COVID policies and their shutdowns impacting import and export, and ships being stranded at sea and unable to dock to load up and get stuff out from China or into China. So, Apple is heavily reliant on import and export, like a lot of companies are. That's about it. Whoa, here comes that thing here. I think I mentioned this on Twitter, but a rough 4 months for stocks. The first 4 months from January to April, S&P 500 books the worst start to the year since 1939, and in the following articles you're going to see similar scenarios like 2018, etc. So something to keep in mind as you decide on where you want to start entering the market with crypto. Tech stocks sink again. Nasdaq worst is here. Nasdaq worst month since 2008, and as some of you may know, 2008 was when we had the financial crash. It was one of the worst crash we've had in the in American history, and that impacted the world, not just. So as also tech stocks is correlated with crypto, and so something to keep in mind. The question is, have we hit bottom yet? To me, no. Here are 3 reasons stocks are tanking, and a lot of these, let me magnify it up for you. Basically, pandemic, the COVID situation from 2020, starting in March. A lot of people were staying at home, so tech stocks like Netflix and stay-at-home stocks, if you will, they had rallies because people were consuming more. There were more demand for it. So, big tech stocks earnings pretty much rallied back then. But now people, COVID restrictions, except for Shanghai and China and Beijing, but COVID restrictions have eased up and people are dining out more. They're traveling more. They're flying more. So a lot of those stay-at-home stocks may not be doing so well. This pretty much summarizes it. that means big tech are now competing for the demand on people's time. So if people are spending time outside, doing active things, where they're not gonna be spending time on their apps or sitting at home watching TV. Some still are. Inflation is another big factor, and it could get worse. It's just not big tech companies earning though. Inflation impacts everyone. It's a tax on everybody. Of course, China and the war in Ukraine. I talk about China almost every weekday, and China to me is a big major risk, and I think a lot of it is hidden and not talked about enough. But the war in Ukraine, not the war, the evil invasion of Ukraine from Russia, it has drove up prices, or is driving up prices in commodities and energy. We have and driving up inflation even more. The sanctions also have rippling effects. So those three major factors. According to the Daily Huddle, macroeconomist Raoul Powell issues mass liquidation warning, says every market position you have is likely wrong. Well, he doesn't know everybody's market positions, but I do agree with him to some extent, and that there's going to be a major market crash coming, major capitulation coming, and because there's so many macro factors that just lingering, and some are getting worse, and at least in the U.S., I don't think the federal government has a good handle on inflation, and they're behind the ball, and so whatever decisions they make, I think we're gonna in some sort of recession. And basically, all he's saying is that right now the U.S. dollar is the only asset that may remain strong, and I agree with him. I've been tracking the Dixie for a while now, and it is, what is it, near its 20-year high as of today. So and the reason the dollar is high is because if people sell other assets and they buy into the dollar, then the demand for the dollar goes up, and its value goes up. This is an article from Barron's. Tesla investors beware April deliveries for NIO, Li, and XPeng hit by COVID. So these three Chinese EV companies, their deliveries have been significantly reduced. So that could be a potential warning for Tesla in the months to come. So, for example, here, let me magnify this up for you. NIO delivered 5,074 vehicles in April, down from 10,000 delivered in March. So you're looking at about 50% reduction. So as an example there. According to The Street, stock higher week ahead, Buffett, Activision, blah, blah, blah. So let's go down through the list here. Stock futures, they did go up slightly, and it was reflected in today's market trends. We saw slight increase in the three major U.S. indexes, Nasdaq, S&P 500, and the Dow. Fed meetings coming up on the 3rd and the 4th, and then we have job data coming in on Friday. So two key events to keep your eye on. Warren Buffett, who does not like Bitcoin, does not believe in Bitcoin, and he said it time and time again, and spent a significant amount of time in his shareholders meeting talking about how Bitcoin is evil, and he wouldn't buy all the Bitcoin in the world for, what is it, $25. He's got his own perspective. Warren Buffett has his own strength, obviously. He's got his own weaknesses too. So basically, he's on a buying spree, and right now, sure, the market's tanking. Good time to buy. So yeah, wealth is realized at the bottom, not at the top. But I don't think we've reached the bottom yet. Uh, Warren Buffett also revealed that he bought shares in Activision when Microsoft was planning to buy Activision out. So Moderna shares edge higher on under 6 vaccine approval hopes. There's a lot of vaccines coming out, and like for kids, like 5 or younger. And I think the percentage of illnesses or deaths for kids that young, I think is significantly low. And so I'm just wondering about all these vaccines coming out for kids that young. Sure, they could be carriers and all that stuff, but I don't know. I some of these for young kids could be more about profit than protecting young kids. By the way, I'm not an anti-vax person. I am personally vaccinated, but I do question some of these motives. According to CNBC, 5 things to know before the stock market opened today. That's Monday today. We already talked about futures, and the worst month in 2008 since 2008. Bond market ran up. Yeah, it came into like a close. What is it? 3%. Let's see what else. What's important here? Buffett bought more Apple shares. Oh, here's another one. Moderna COVID vaccine could be first cleared for kids under 5. Everyone's got to make their own decisions for themselves and their family, but I don't know about COVID vaccines for kids under 5. I totally get it. There are certain vaccines that are required for kids to attend school, and that needs to be checked, etc., etc. But I'm not so sure about COVID vaccines for kids under 5. Oh, here, the dollar approach. Let me get rid of that. Ugh, I hate these ban rats. Dollar approached 20-year high. Fed meeting in focus. So I mentioned earlier, and also in my earlier morning chart analysis for the market. Yeah, dollar is approaching 20-year high. Some people anticipate it could be facing resistance pretty soon, and that it might drop. I don't know about that. I think there are a lot of macro environments that could keep the dollar high or get it to creep up a little bit more. And if the dollar goes high, that means people are buying into more of the dollars versus other assets. 10-year U.S. 10-year Treasury yield tops 3% for the first time since 2018. Yield moves opposite price, so price is dropping. People are selling the 10-year, so yield goes up. And if yield goes up, it could potentially lure more people in because of the return. This is an interesting article here. According to CNBC Business, inflation spurs record decline in workers' wage and benefits. So what this article is talking about is if you adjust total compensation costs for civilian workers by inflation, so you adjust, for inflation, the workers' compensations and their wages, it's declining 3.7%. That means in the last 12 months. Ending in March. And that means that even though people are getting raises, they're actually not getting paid as much as they think if you adjust their raises and accounting for inflation. So people are actually earning less, even though they may look like they're earning more. I mentioned I forget which day it was, but recently in the last several days, one of them, I talked about Lake Mead in Vegas and how it's due to climate change and the water level has shrunk down to a level that it's really low, and it dropped below one of the valves that they have in there. And now I think there's like 2 valves left to be able to draw water out of Lake Mead. Here's another article talking about Lake Powell. And now this lake is also facing similar situation. But the challenge with this lake is that there's a dam that they built for this reservoir or lake, if you will. And that dam generates electricity. As the water level gets below a certain amount, they have to decide now, they can't generate hydroelectricity because the water is too low, so they got to use that water for water. If it drops another 32 feet, all hydroelectricity production will be halted at the reservoir's Glen Canyon Dam. So if hydroelectricity is halted, that means energy into the area is going to be impacted. So climate change and the impact of climate change is real, people. I know some people don't believe in that stuff, but if you happen to live in an area where climate change is impacting your area, whether it be water or wildfires, etc., you feel it. So we need to get a handle on this. This article is from Reuters, and I need to click this guy. Fed wants to cool the U.S. housing market. Here's what that feels like. So with the interest rate rising, that's designed to cool off inflation, obviously, but also it cools off the economy too, and cools off the housing market. With the housing market in particular, as interest rate goes up, it makes it more challenging for people to be able to, one, qualify for loans, because the debt to income ratio and what the qualification criteria is makes it more challenging. But also the rate's so high that the mortgage payments per month to their overall income gets a higher percentage, and that makes it more challenging. So it has cooled off the real estate market a little bit, but inventory is still so low that people are still demanding for it, even though it's cooling off. And that's going to create additional issues, rippling effects in the near future. For example, if housing costs go up, right? Even though the market's cooling, it's the cost of housing is still high. So when people are renting out spaces or houses, that's going to drive rental prices up too, and that creates more pain for everyone who is all renters who are also facing inflation in food costs, energy costs, etc., etc. So, and we're a year out to seeing the real impact of the inflation costs and the real estate market costs of housing. U.S. manufacturing, yikes, sorry about that. U.S. manufacturing activity slows in more than 1.5 years as workers quit. So the ISM I gotta be somewhere right now. The ISM manufacturing index falls to 55.7 in March. And basically, this is a drop. And not only that, so if manufacturing is dropping and workers are also quitting, that's going to create more problems in the market for products like cars and things like that. That will drive up price as well. Biden kicks off $3 billion plan to boost battery production for electric vehicles. I think this is a step in the right direction, especially for the U.S. economy. All the major car manufacturers are investing in EVs right now, even though for a few years back, the majority of them were touting hydrogen-based cars. But it seems like they're all transitioning to that. And part of this has to do with lithium. We need lithium to generate battery for these EV cars. So this funding will help that industry or that sector to grow. Risk of Putin using nuclear weapons rise as Ukraine succeeds. And this story is by Newsweek. What's concerning about this story is that Putin has not had a lot of success in Ukraine. And, what they've been successful at is basically being evil, murdering innocent civilians, raping women and children, like teenage girls, killing people who are trying to escape, kidnapping people back to Russia so they can use them as chips to trade for their soldiers getting captured. And let's see what else. Oh yeah, stealing crops, stealing tractors. There was an article about them stealing tractors, but those tractors were remotely disabled, so the Russians couldn't use it. Yeah, they've been successful on those fronts. What's concerning is that because they haven't had the success they wanted in Ukraine, they could potentially use weapons of mass destruction, such as chemical warfare or nuclear, small nuclear bombs. And that's causing some concerns for the West. However, there's no indication from the West as far as what is the red line. What are they going to do if Russia decides to use weapons of mass destruction? So that is a concern that keeps hanging, and that will impact not just the market, but it'll impact the world in many facets. The sooner we get rid of Russia's aggression towards Ukraine, the better for the world. EU leans towards a Russian oil ban by end of year. And this is dependent on, just imagine you're a bunch of nations and you are heavily reliant and dependent on one of the most evil person or country in the world. Yeah, just come on, get your head together, find ways to end your energy dependency, get rid of the drugs that's getting you hooked up. And Germany, I think there's an article soon to come here where Germany is on board. Germany was resistant at the beginning of the invasion, but now they're on board to pretty much get rid of their dependencies on Russian energy. And Germany is the the EU's top economy, so that's important that they're on board. Goldman Sachs slash credit, credit exposure in Russia. They went from an exposure of $650 million down to 260 or so. So this article from Newsweek, Russian military leaders tried to lift troop morale as 10th general killed. So what Putin is having his general do is the troop morale. It's been reported that Russia's troop morale is so low that some of them refuse to fight. And so, think about it. You're sent on a mission to do dumb things, most reasonable person would think, why the hell should I do this? So anyway, Putin is asking these generals to go to near the front line to get troop morale up because of their presence. And so that it leaves these generals exposed, and so they get killed. So the 10th one just got killed. My suggestion to Vladimir Putin is this. Instead of sending these generals to the front line to rally the troops' morale, I suggest you, Mr. Vladimir Putin, to go to the front line and rally up your troops. I think that would really do it. That would definitely do it, and your troop would be their more morale would skyrocket, overnight. And you just keep doing that on the front line instead of hiding behind your 20, 30 feet table in some kind of bunker or whatever. Get out to the front line, Mr. Putin. Go out there. Rally up your troops. Okay? Do it soon. China's manufacturing PMI edges down to 47.4 in April. This is not a surprise here. With the COVID lockdown, people are not working. companies are shutting down in Shanghai and Beijing now somewhat, and other places. It's no surprise that their manufacturing PMI is down. So keep an eye on China. I'm telling you. Shanghai. What is this? Who's this from? This is from Reuters. Shanghai lockdown sends chill down meat trade. China is one of the world's top meat importer. And so with the lockdown and ships not being able to get in to deliver food, or like people being able to deliver from the port to the warehouses, yeah, obviously it's kind of impacted a meat industry. So if that's the case, think about it. The U.S. The U.S. exports a lot of meat, or other countries. So if China is not importing meat from the U.S. or other countries, those economies are going to be impacted, right? So you can see that how economies are very much connected. Here they say, like few drivers, trucks, take delivery. Yeah, so. Oh, this is a good article. According to CNN Business, China silences prominent market analysts as economic slump deepens. This story is about how China, unlike other, the more democratic countries, China pretty much regulates their media, and even though the media companies may not be state-owned, China still can regulate them and tell them what to censor and what not to censor. So there's this guy, this analyst, Hong Hao, and he published, I believe it was on WeChat, some articles about how money is moving out of China. And they didn't like that, so they censor him. He's a pretty good analyst. So now, why do they want to do this? Well, they want to paint a picture that their economy is stable and it's growing, or whatever picture they want to paint. But it's not, So China is one of the economies that I keep an eye on, because I think they have the potential to drag down the world market with what they're doing, especially zero COVID policies and their real estate market, etc. So, and they continue to do this whenever someone says something negative about or bearish about their economy, they tend to shut them down. So he posted about huge outflows of capital from the country, and that's just outflow from capital outflow just means money moving out of the country. And when the country is healthy and their economy is healthy, money tends to flow in so that people, companies and other entities can invest in their market. Don't trust things that come out of China. I mean, as far as the government is concerned. I already talked about this. Germany will support EU oil embargo on Russia. Good for them. This one is about... where is this from? Reuters. Ukraine may lose tens of millions of tons of grain, Zelensky says. And Ukraine is, they do a lot of exports of commodities and grains. And so because of the invasion, they may lose a ton of grains because, one, they can't work it. Two, obviously, since they can't work it, they can't grow it or process it. And then Russia's stealing them. So, yeah, and this is going to impact world... different parts of the world, because when they export stuff, other countries buy their grains, and so that may impact food supply for different countries, especially like developing countries. And that is the news, and I need to go to my next event. I appreciate your time. Please help spread my analysis to help people understand the market a little bit more, and also share your comments below. Smash the like, ring my bell, hit subscribe if you haven't, and I'll see you in the next video. I have 2 left, Bitcoin and also Matic Monday. Peace.